Welcome, everyone, to another episode of the Auto Accident Attorneys podcast brought to you by the Auto Accident Attorneys Group, where our motto is simple: we take care of you. By now, if you've listened before, you've seen that we've had episodes ranging from pet adoption to barbershops. Today, we're going to get back to some of the basics, how it all started when I proselytized to you all about uninsured motorist protection. Today, I am so lucky to have a fellow community member and a business owner with me, East Cobb local, Kory Rykman of the Rykman Agencies. And we are going to talk all things auto insurance and Allstate. And I'm going to be very nice to Allstate, even though typically this building isn't very nice to Allstate. Today, we will be. Kory, thank you so much for joining me.
It's my pleasure.
Before we hop into auto insurance and giving people advice about what to choose and how to make those decisions, why don't you please tell me a little bit about yourself and how the Rykman Agencies came to be?
Well, so I'm an agent, an insurance agent. My wife is also an insurance agent. We're business partners. We have multiple offices with 33 employees now, I want to say. We manage a really big agency across multiple states. Like close to 30,000 households are our customers here around Atlanta.
Impressive.
Yep. So I'm in the weeds every single day with customer escalations and writing new business and making sure it's compliant. So hopefully I can add some value to your listeners from a purchasing insurance standpoint and what they'll need.
Absolutely. I really appreciate you coming in. I feel lucky that I'm able to have this conversation. I don't know how easily I could have gotten somebody to come in to a plaintiff's firm to be like, yeah, this is what insurance is about. But I did want to share this. I'm holding it incorrectly. There we go. We're going to put your ad. We don't have commercials, so I'll just put the ad on screen. So that's you and your wife, 5-star reviews, 30,000 households. So you probably are even more acutely aware of claims than I am. Let's start with, before we get into the practical logistics of it all, share some stories with me, not nightmare scenarios, but maybe some issues that you have where one of your clients may call you where it didn't have adequate protection or something went sideways, or does that even exist in your world?
It does exist all the time because customers are constantly shopping on price. It is the number one thing any customer that calls into our agency or fills out a web form or whatever, it's all about price. And that's not what the conversation should be about. Like, yes, you want a good deal, but that doesn't mean the cheapest thing out there because you are getting way less coverage. I promise you, if you want the best price, we can give you the best price, but you're going to miss a ton of coverage. So God forbid something happens, you might not have the coverage that you really needed because you were shopping to save $10. So
Right.
realistically, it's like in anything you buy, you just want a good deal. You get a good bang for your buck, feel good about the purchase, and that's not always the cheapest thing out there.
Right. I think that's one of the issues. I can validate what you're saying right now because I see it after things go wrong and they come to me because they need to litigate an issue. When they're basing it on price, they are under the misconception that the coverages are all the same, or the protection is the same, regardless of which bucket they pick. And so they're picking the least expensive bucket. But there's so many little variables that go into what is and is not covered, right?
Yeah, and part of the issue is you're buying insurance sometimes from people that just won't have that conversation with you. Like the insurance agent you're talking to or the online form you're filling out and trying to buy a policy online, you have almost no clue sometimes on exactly what you're buying. So buying from just a 1-800 person, there's not going to take the time to explain coverages. And one thing I wanted to mention is the bulk of the customers we work with is the more educated, if you will, like the customers that care more about their finances. So
Mhm.
it is less common for us to kind of fight on price with certain people because they do understand value. They own nice houses like they do around here in East Cobb, nicer cars. So they do have a better conversation with our agency than if you were buying a 1-800 policy.
Right. That makes sense. One of the things I always tell people in our office, especially our intake department, is when you get that intake call where it's a catastrophic accident, 90% of the time, that's going to be an accident involving either minimum limits or no insurance. Because the people that cause the head on collision driving the wrong way down the highway that causes fatalities are rarely the type of personality that has protected their assets, that had the foresight to get protection and be like, oh, this is the type of policy I need. These are the assets I have to protect.
That's like the easiest thing I often say when I'm talking to a customer is you've earned or you've worked your butt off to have this nice house, to have these nice cars. You've built yourself some savings, maybe some rental properties, a stock portfolio, etc. Like the cheapest way to protect all of that is to have more insurance. Yes, it's another $300 a year or whatever for more coverage, $600 a year. But like it's a lot easier for insurance to cut $1 million check than it is for you to have to liquidate your assets to pay for this claim.
Right. So I'd like to get focus in on, because we're the auto accident attorneys group, I'd like to focus in on auto insurance specifically. One of the conversations I have all the time are people that come to me and say that they're not worried about what the case value is going to be because they have full coverage. Well, what I have to tell them is full coverage doesn't really tell you anything about what is actually covered. Typically, what I've found is that people, when they're talking about full coverage, they're just talking about the property damage. They have liability and collision, but they may not have uninsured motorist coverage for bodily injury. And even if they do, then there's different levels of it. They could have it at the Georgia state minimum, which is 25, or anything above that.
Mm-hmm.
So when somebody is out there shopping, the listener here, can you take us through a sample onboarding, or the types of questions you would ask, or what they need to analyze to know what kind of insurance to get for auto policies specifically?
Yeah, definitely. So probably the most prominent one you talk about is just regular bodily injury. That's protect, like God forbid, you're at fault in an accident, you hurt somebody else in another wreck, and they get out and they're like, oh, my neck. They're going to want to sue you or hire an attorney to get you or your insurance company to pay for their injuries. So how much coverage do you need? I like to say, if they want to sue you for everything you got, how much is that? That's how much really liability coverage you need right then and there. And maybe it's $500,000, maybe you're worth 100,000, but at the very least, whatever your liquid net worth is, like that's how much insurance you need from a liability standpoint. Then obviously it's your car, property damage. So if you're at fault, like can you leave the accident with a totaled car and just write it off and get nothing from it? Most people are like, no, I want my $30,000 for my Camry or whatever. So you need enough property damage now for your own stuff. And then uninsured motorists is probably the hardest conversation you have with customers because they just don't comprehend it that well.
Mhm.
And it's hard to say it in like really layman terms because you've got the added on and the minus,
Right.
and you really lose people there. So the way I like to have the conversation is, now, God forbid somebody hurt you in an accident. They had state minimum insurance or no insurance at all. They left the scene and you're hurt. Like, do you want your insurance company now to pay for your medical bills or for your injuries? And a lot of times they're like, well, I have great health insurance, so if I'm in a hospital, and a lot of that is true. Your health insurance definitely kicks in and pays for injuries sustained from an accident. But what if you can't work? What if it's more than just those bills from the hospital? So that's where you have to have the uninsured motorist conversation with people. But that's also probably the most expensive line item on an insurance policy.
Oh, I didn't know that.
Yeah.
The UM coverage is the most expensive one.
Has become the most expensive one. It used to not be. Liability, like just the general liability part of it, is very, it depends on how much coverage you buy, but yeah, I'd say has become the most expensive, and if not, it's within $1 or $2 of each other.
You had mentioned the reduced by versus the add-on type of coverage. So well, actually, let me let you describe it.
I'm going to lose a lot of your listeners here because it is confusing. But you have two kinds of uninsured motorists. You have the regular, which is called the reduced, like minus. So whatever the other person's company pays, let's say their limit is 25,000, it gets minused from whatever your policy says. And if there's anything left, that's what you get.
Mhm.
Whereas the added on is just like it sounds. It's added on. Whatever the other carrier pays, it could be 25, it could be $100,000. Your coverage now can be added on top of it. It's never minus. It's just whatever they pay. Now you have whatever your limit is can be added on, never minus.
Between those two types of uninsured, I know that the uninsured motorist policy line item has become really expensive. What is the price difference between the reduced by versus the add-on?
It's twice the price to go add it on.
Is it really?
Yeah. So if you're buying $100,000 uninsured motorist policy, it'll probably be in the neighborhood of $350 every 6 months.
Mhm.
And to go to add it on, you double it. It'll be $600.
Really? Well, I didn't know that, but it makes sense because, well, from my perspective, I'm the guy that you go see that needs to get into those policies. When it's reduced by, the statistical likelihood of it ever being used is pretty radically reduced. It only really kicks in if you're hit by an uninsured motorist and they have zero.
And maybe you can speak on that and educate me a little bit. When does added on, non-added on really come into play? And maybe share a case scenario.
Sure. Awesome question. I'm glad. It's almost like you were setting me up for it. So, obviously, but for our listeners, you don't get into uninsured motorist coverage until you exhaust the liability policy. If the at-fault driver doesn't have a liability policy in place, they're completely uninsured, then you can immediately tap into your uninsured motorist protection. Doesn't matter if it's reduced by or add-on. On those cases where
they're treated equal at that point,
right,
because there's zero to begin with.
right, they were uninsured, so there was zero to minus from the policy. Thank you for bringing that up. Hopefully, it makes sense to the listeners, and we're not losing them. In the cases where the at-fault driver has, let's just say, the Georgia state minimum of 25,000, then once that's exhausted, that's when you as the insured are able to tap into your policy, the underinsured motorist part of it. When it makes a difference on whether it's reduced by or add-on depends on how much in medical bills that you've incurred. If you've got $30,000 of medical bills and they have a $25,000 policy and you have reduced by, you're going to be upside down that 5,000 because you have to minus their 25 from your 25.
So what if someone has excellent health insurance and they have to stay in the hospital for a week, broken leg or whatever, and they get out and they're fine and everything, but where does health insurance not kick in or kick in versus auto insurance in a case like this?
We're going to start from the night of the auto accident. When an auto accident occurs and the injured person that was not at fault is taken to the hospital, the industry has turned in such a way where in the hospital intake department, it looks like a nurse, but they're actually part of the management office. They come in with that little thing on the wheels with the computer. If you're taken in by ambulance, they already know you were part of an auto accident. If not, they'll ask if it's an auto accident. If it's an auto accident, they may not take your health insurance. Not because it's not accepted, but because they don't want to, because the health insurance contractual rate is going to reimburse them at such a lower rate than if they bill you directly. And what they're doing, they present it to the patient as if you're in an accident that wasn't your fault. You don't need to use your health insurance. The other person will pay for it. What's really going on is that they're billing against the settlement that that patient is going to receive at the end of the case, and they're billing dollar for dollar. And they'll file a lien. There are law firms that's their whole job. They work for the hospital, and they will file a lien against the settlement proceeds of an auto accident case. So one of the things that because we specialize in auto accident cases, we actually have a lien coordinator whose sole responsibility is to deal with issues like this on behalf of a client, has no legal work, just in terms of accounting. So when we do intake and we know that somebody has gone to the hospital, we immediately will get their health insurance information, contact the hospital, put the hospital on notice that this person has health insurance and they are obligated to take it. That's another issue. If the hospital has contracted with United Healthcare and the patient presents United Healthcare, the hospital is supposed to bill United Healthcare. Now, the reason that it becomes a little bit of a problem is because the hospital doesn't want to actually bill United Healthcare because they don't want to receive contractual reimbursement. United Healthcare doesn't want to actually pay because they don't want to pay out any premiums. So even though the rules are in place, you've got two entities that don't really want to play ball with you.
Mm-hmm.
The health insurance doesn't really want to pay, and the hospital wants to file a lien. So there's a little bit of a problems or issues that come along with that, but we push it through. Getting back to the question of when does health insurance kick in? Technically, it should kick in when you're there. Why would you still want the uninsured motorist protection? Is because you still have the pain and suffering and general damages to get reimbursed for. If you don't have insurance, you're not going to get consideration for the possibility of future medical bills, right? Like if you've got an injury that shows you have a physician that says that you're going to need 6 ortho treatments in the next 2 years and 20 physical therapy treatments, we average that out. Let's just say that each visit is $1,000. You can actually use your policy if it's already in excess and receive some consideration for that future medical treatment, but you're not going to get that through your health insurance. When you go and make those visits in the future, you can use your health insurance, sure, but it's sort of like a different, it's the present value of the dollar.
Mm-hmm.
You could get that right there at the settlement or use your health insurance instead.
Yeah, and you mentioned pain and suffering, and like it's one thing to just get your hospital bill covered. You walk out of there though, but like what just happened to your quality of life if you've got a broken foot, broken, whatever? Like that sucks.
Yeah. And even the deductible and the copay or the ambulance, most health insurances won't pay for the ambulance ride. And the ambulances are all private entities and they bill and they don't reduce their bills for anything. Unlike hospitals that sometimes will do a charitable write-off, the ambulance won't do it. So by having insurance in place, even if you've got great health insurance, if you've got the appropriate pieces of your auto insurance in place, you're covered against the copays, deductibles, the EMS service, which leads me to medical payments coverage. What is the cost of med pay on policies right now?
So MedPay is way cheaper than and it's kind of become common practice to steer people to max out MedPay and do less
Hmm.
And I could be wrong for saying this, but like Mother Insurance, when they teach us salespeople how to sell their policies, they do often say that is like the reason it went up in cost and yada yada is because so much of that goes to attorneys, whereas MedPay maybe doesn't go so much to attorneys and goes towards those medical bills. So they,
Where it's a contingency fee-based practice and you're not permitted to take fees on medical payments coverage, which actually, if you're a listener and you've ever been represented by an attorney and they took MedPay fees, you might want to give them a call or contact the bar. But that makes sense. So it goes directly to reimburse incurred medical bills.
now on the downside, MedPay limits are way smaller, way smaller. So like you might get up to $100,000, if I'm not mistaken, is the limit on MedPay. But for it could be $500,000 or more, depending on the carrier.
Right.
Yeah.
Typically, the most common number I see in our cases when we're doing intake, because we've got graphs on every case on a quarterly basis, I'm reviewing, how many cases did we have that had uninsured motorist, how many cases had MedPay, and I'm looking at them. The most common number I see for MedPay is 5,000.
Yeah.
That's by far and away.
This
This
is
is
like
common.
$5 for that
It annually or per pay
Per-
period?
per 6 months.
Okay, guys, for $5 a month, for $5 per pay period, you can get medical payments coverage that will pay for any incurred medical costs that you have up to $5,000, regardless of fault. That's
Yeah, that
the little
pretty much
catch there.
covers your deductible,
Yeah,
your health insurance deductible at that point. If health insurance did kick in and pay for all this, you're
right.
still walking out of there with a bill. MedPay will cover
MedPay
that.
will cover that. I've been in an accident myself. You were talking about your accident earlier before we started recording. I was also in a single vehicle accident, a rollover in a Jeep,
Oh, well.
and I used I have health insurance, but I used the MedPay to pay for my deductible. Luckily for me, I had gotten into that accident early in the year. So the rest of that year, I had just free use of my health insurance with no deductible, which is another thing to take into consideration when you decide to use health insurance or have your doctors treat you on a lien if you have an accident case. If it's the beginning of the year, we recommend that you use your health insurance because you're going to get that deductible reimbursed, but you can use your health insurance without the deductible for the rest of the year and maybe line up some procedures that year after an auto accident. That's just sort of like a practical advice
Yeah.
type of thing. Okay, so getting back to the logistics for liability, it makes a lot of sense. Look at what you have, whatever it is that you need to protect, and then purchase enough insurance to shield that. Do you have a formula or anything similar for when you're talking to people about uninsured motorist protection?
I can't say that I have like such an easy, simple question I should be asking them, and maybe you can help me formulate one. Um, for UM, it does become like a cost discussion
Mhm.
because they understand to protect their assets, and then so many people struggle. Like hypothetically, if I get hurt, and the other person doesn't have a bunch of insurance, you can buy as much insurance as you want, but you might never use it. So people struggle with buying a ton of insurance on a scenario like that.
Yeah.
Whereas they know they've got a house to protect and stocks to protect, but like I may never get hurt.
Yeah.
So they struggle on buying a bunch of because it is expensive.
Yeah. From my perspective, because of what I see day in and day out, I've had friends reach out to me because they've seen my social media content and they reach out to me when they're purchasing insurance. So if you ever need somebody to help do a sales pitch, feel free to hit me up. My personal friends and family members, I look at the liability limits as yes, you're protecting your assets from being seized when you do something wrong or negligent. But if you flip that a little bit, what you're doing is you're paying to protect somebody else in a sense, because if you cause injury, you're paying to make sure that that person's injuries are handled. You're
Yeah.
at the same time, contemporaneous to that, you are protecting your assets, but you're making sure that they're handled. The uninsured motorist protection, I tell friends and family, if I'm paying to protect others, I want to get the same amount of limits that I have in liability for protecting myself and people in my vehicle. In any given time right now, I've got 4 people in my vehicle. So knowing the rate of uninsured motorists in the country, I want to make sure that I've got as much protection as possible. I want to make sure that I'm protecting my own occupants of my own vehicle as much as I'm protecting
So
people in other
that
vehicles.
did remind me. That is definitely one way we have that uninsured motorist discussion is because what is it, like 1 in 5 drivers has no insurance, somewhere around there. And then let's talk about how many people have state minimums, which is $25,000. So God forbid they do hurt you in a wreck and run, or just have no insurance. It's 25 grand. You're injured. Like, don't you want your own insurance company to help with your pain and suffering with your injuries? And that's where really comes in.
I don't know if you probably haven't seen any of my social media, but most of my social media, if it's not pictures of my kids and food, it's about uninsured motorist protection specifically because I've seen too many times people be involved. And again, earlier in the episode, I said the most catastrophic accidents are caused by people that are woefully underinsured, if insured at all. So that's the one thing where I believe that you owe it to yourself, you owe it to your family to purchase that product to protect, knowing that there's this many uninsured drivers on the road.
I think a good rule of thumb is if you have acquired any decent amount of wealth or net worth. Like, I'm not talking about millions and millions of dollars. Like, you finally afforded a house. You're not struggling every single day, paycheck to paycheck. Like, at that point, you max out your insurance. I mean, I did that early on in my career and never looked back.
Mhm.
So I think a good rule of thumb is just because I said it earlier, that the cheapest way to protect all this stuff is through auto insurance and property insurance and whatever stuff you have to protect. Just it's a couple $100 a year, and you could potentially have millions of dollars worth of coverage. Like, that's the best use of a few $100, in my opinion.
I 100% agree. I had a guest on last week and we were talking about life insurance and we were talking about term. She said that everyone should have term no matter what. And I made the metaphor that I think of that as like the revolver underneath your mattress, so that, or in the safe. You don't want it. You're not a gun guy. You don't want to go out and shooting with it, but it's there as a worst case scenario. Insurance is like that revolver where the way I look at it, I hope I never have to use it. If I pay an additional $600 a year, good. But the peace of mind that that brings, knowing that if it happens, and I think I'm in a unique position because I've seen it affect people. The number one cause of bankruptcy in America is unexpected medical bills,
Yep.
right?
Yep.
The number one reason for unexpected medical bills, I believe I had looked into this last year, was disease. But right behind disease is auto accident or some sort of accident injury. So knowing that statistical probability is that high and that causes bankruptcy, here we are in this episode telling you there are products there's no safety net. That's another thing. I feel like a lot of people think, well, I wasn't at fault and all of these bad things have happened to me. Surely there's protection for me from somewhere. The state will step in. And I always tell them, like, first off, don't call me Shirley.
And then it won't.
They won't.
There's
nothing.
nothing for it.
No.
Part of that is maturity. The older you get, kind of the more conservative you become. And what do you think insurance is? It's kind of like you're being conservative and you're buying insurance to protect yourself so other grabby, won't come after your own assets.
Right.
And the younger folks, they don't have that same mindset. They maybe haven't earned enough money to feel that way yet. So they just give me the cheapest thing, but then they end up getting hurt and it affects their life a lot longer than it would somebody that's older. So an argument can be made that, like, you should still have adequate insurance even when you're young. 'Cause
Yeah.
you got a long runway there.
I have so many questions on the homeowner side and I have questions about like insurance leaving, but I feel like we should probably save that for another episode. Usually at the end of the episode though, what I do is I provide the guest an opportunity. If there's something that you feel like we should have covered that we didn't cover, or if there's something in your heart that you feel like listeners could really benefit from hearing, just sort of like an open forum for you to give information or advice to people.
If you are a potential customer of the Rykman Agencies, like, you owe it to yourself to have a serious conversation with a good insurance agent about all of your assets and how to properly protect them. Insurance is one of those things where people will just shop based on price and not coverage. And if you have any net worth, it's time to have a coverage discussion and not a price discussion. And so our agency was in 2023 Allstate's #1 agency in the country. Out of 8,000 agents, Kory got #1. And we're not far behind in the next 2 years. So we're continually an awesome agency. And we insure more homes in the state of Georgia than any other Allstate agent. I personally invest in real estate. So, like, I really understand homes and investment property and protecting those things. And obviously auto insurance, I'm a huge gearhead. So we can protect your cars too. So all I'm saying is, when you're done thinking about cheapest price and you want to have a serious conversation about protecting your life, that's when you call us. Call the Rykman Agencies, look up Kory Rykman, and just give us a call.
That's awesome. We'll make sure to get all the links below the video so that you guys can reach out to Kory. Like every other guest that we've ever had, you already know if they're willing to come onto the podcast, They're looking to take care of you. So reach out to them. As always, please like, comment, and share. It'll really help me out. And Mom, I know that you watch every episode every week, and I appreciate it. You're getting my YouTube views up. I love you so much. I'll see you next week. Take care.